My question is to Rajeev. Today what is happening is we're looking at building a modern financial system. In most of the developed nations, crowdfunding has been a big success. But in India, we are just still looking at regulating how it could be regulated, and even SEBI is working very closely on trying to see how the entire crowdfunding mechanism could come about in India. You go to Australia, you see the BRICS exchange, where you could invest in a residential apartment by investing in each brick. You could invest in each brick. So you have new modes of raising funds. And today, what is happening is, in a time where India requires money, the investors, the entrepreneurs require money. I think it's absolutely essential for the government to see how best they can give options to the entrepreneurs to raise funds, either through crowdfunding or through BRICS exchange, whatever it is.
No, absolutely. So on that, actually, again, now if you look at the equity market regulator, SEBI, so the way I see it, their first impulse is protecting investors. So if you look at something like crowdfunding, probably the reason they are going very slow on it is they're afraid that even if one scam happens or someone puts money into a kind of a Kickstarter style project, and that project doesn't take off, and someone loses, let's say, 1,000 rupees or 10,000 rupees, then how do they protect that guy? So what they end up doing is, to protect everyone, you kill all activity. So it's better to have no activity and no losses rather than some activity and some losses.
So I just, on that point, I remembered one thing very quickly. SEBI recently increased the minimum amount you can invest in a PMS from 25 lakhs to 50 lakhs. They increased the net worth requirements of the PMS who runs the company who runs the PMS, and many other. There was no documented need to do that. Who were the the committee was formed? Of course, technically they asked for public feedback. Already the big people who were running the PMSs and AIFs. So this is a classic case of regulatory capture which happened. And the net result is one more investment avenue has gone out of the retail investors' playbook, because we've been overly careful for no documented reason whatsoever. Why 25 lakhs, why 50 lakhs? Those are round numbers. And the reason they said was, well, if you adjust for inflation so many years, we should increase it. So basically, more and more avenues are getting killed, and effectively people who invest in Indian financial markets try to create alpha. They're sitting in London and Singapore. They are not, US dollar, rupee trading happens in the US, in Dubai, and so on and so forth. So a lot of the activities getting outside of India, we are trying to now create the IFSC. We couldn't get to discuss that. So at some point, and then of course we increase the taxes also in this budget. So we need to think, financial markets are not just regulation, the people who also run those markets. And we have extraordinarily onerous requirements for no documented reason.
No, and I would also add to that, if and when people lose money, they will take away some lesson from it, or at least should take away some lesson from it, right? So if, let's say, someone invests in a startup and it doesn't work out, so the angel investor or the early investor will figure that, I lost money because of this. Now imagine if the government said that only those who have net worth of 20 crores can invest in a startup. Nobody else can invest. So you are trying to save people from themselves and essentially preventing them from learning.
So I think, on the PMS side, for instance, just a quick background, I think one of the key reasons why this was also done is just to increase or to reduce the number of people who could participate, or have a benchmark for probably level of investing savviness or etc. But I think there was a lot of mis-selling happening on PMS products, and I think that was one of the reactions where they just ad hoc increased the limit, of course, without too much science to that.
But if I can interject there, sure. Someone who's cutting a 25 lakh check minimum.
Correct.
So there should be some responsibility on them to do their own DD. So why should the regulator take it upon themselves?
So I think that's where I think the regulator's protectionist regime has still not gone. Right, so crowdfunding, for instance, today technically you have something called the collective investment scheme available. So someone who wants to do crowdfunding can actually register as a CIS and do it. People, of course, and our regulators are not as easy to deal with as well sometimes, and therefore having a CIS scheme, people say, okay, I don't want to register, I'd rather do it otherwise. But if we look at a plethora of SEBI SAT related judgments on CISs, it amazes me when I look at that several thousands of crores have actually been taken up by people. Again, a lot of it doesn't hit the newspapers, and therefore, you don't actually get to see it. But that money has really been taken by people and not returned. It could have been for investment in land, investment in a township. It could have been on various fronts. Some of the names are public.
You mean various state funds?
Sorry?
You mean various state funds?
Collective investment
No.
schemes.
So these are effectively Ponzi schemes or
Yes, so they were not organized formally.
They were not organized.
Yes, exactly.
They were not formally
Elected
organized.
schemes.
And therefore in that sense, that's where the sense of regulation is coming in. But at the same time, we are in an age where you need liberalization, and where do you really
all
balance
equities,
the two?
etc., are in a demat format. It's not the same as taking money and running away. So, I mean, some common sense has to be applied.
No, but again, to bring back my cheating example. So because everyone is cheating, even the person who studied hard and got good marks, their marks are worthless. That's effectively what this is, right?
That is happening.
It's a state capacity issue, basically. So on that point, very practical point is, what is the salary of top officers of regulators? They should be much higher. So I've criticized the regulators here. I honestly think the salaries should be much higher. They should have some performance bonuses as well. So you can't expect top talent to go to regulation if you basically pay peanuts compared to the private sector.
Absolutely.
So that's a broader state capacity critique, but it also applies to financial regulators.
Absolutely. Any other questions on the floor?
Good afternoon. My question is not directly related to regulations, but something to do with financial systems. So there was a lot of fanfare about the gift city in Ahmedabad, and that becoming a regional finance hub and things like that. We heard a lot about it at the time of launch, but we just want to get some insight. How it's panned out, if you've had some experience around it, and does that lend itself to some more activity in India?
So I think there's still very early days on that. The point we were discussing about the unified regulator, the cabinet has just decided to, at least for the gift city, have a unified regulator. So that will become reality soon. But you're absolutely right, it's moving very slowly. I think the vision is broadly correct to have kind of a SFZ, like a special financial zone, where this capital account stuff and taxation will be different and so on and so forth. But as of now, I think you would be knowing much better from the legal side, because if there are deals, you would be aware of it. As of now, I don't see anybody in the industry being overly excited about it or so far. But you keep on hearing some news about it. The government is trying to push it. But right now, it's basically...
I think it's much slower than expected. I think the push is still there to have it in place. I think the logic is simple. Let's take any PSU bank, right? Let's say a Bank of Baroda, an SBI. Historically, what happened is they would sit out of, let's say, a branch in Bahrain or a branch in Singapore and lend in the form of ECBs to companies in India. What was the rationale to actually do that? I think the idea really, again, from a banking perspective, is that if you have an overseas branch, you tap the overseas market. Don't tap the Indian market back. But no one was incentivized to do this. Right? So 95% of their book was actually brought back into India. And therefore, again, every bank has really thereafter taken a decision that let's shut branches rather than having these multiple branches which are not being used for actually expanding geographies overseas. Yes, they can help support Indian companies who are moving overseas and lend to the foreign subsidiaries. That's a separate matter altogether. But all of this consolidated can really be done sitting out of Gift City, which is an offshore territory. So I think those are fundamental. That's one of the basic underlying thesis, that why go elsewhere when you can have it over here. So I think motive is laudable, but I think we are going much slower than expected. Having said that, I know of several banks who started their operations over there and who are conducting this. So they continue to have relationships from all over, but they're actually sitting out there and disbursing. And that's a positive change we are seeing in the banking industry.
No, and I just want to add one general comment on that. Now, This is a very curiously Indian approach, where now if all the stuff happening in Gift City is what we want for a financial center, why don't we generally make them available to the rest of India? Why create a Gift City and then only they will have it? If a unified financial regulator is a good thing, let's do that for the country.
They're trying it out first there.
No, but still,
Yes.
in the sense that now if you look at the IPO regulations, so small companies were having difficulties going public because of the IPO regulations. What did the government do, or what did the exchanges do? Let's create an SME exchange. So instead of fixing the general regulations, you go on creating special categories. And then someone can't IPO, create a special fund for them. So it just creates a cascading effect of
The core problem is not solved.
complete web of regulations, and then someone looks at it and they're like, who the hell created this?
I think with that our time is up, and I think the key takeaway really has been there's a lot to be done in terms of regulatory reform. I think technology, innovation, etc. are moving at a certain pace, and possibly regulation will need to keep pace with it. I don't think we're out there yet, but let's all hope that we get there. Thank you.